Hey there, everyone. This is Eric Richards. I'm a local real estate agent in Colorado Springs. I also run a real estate website and a brokerage called Springs Houses Online Realty. I'm going to do a market recap for the 2024 year, as well as touching on some December numbers. I do these every month. I also do a weekly series on your questions answered. And so if you've signed up on the website, you're getting this as part of my captive audience. I also want to highlight for a little bit that before I dive into the numbers, that this market is incredibly frustrating for buyers. Sellers, as much as they hold all the cards because they own the homes, it's frustrating for them because the days on market have grown compared to what we used to experience during the days of COVID. But for buyers, I truly feel your pain. It is really exacerbating to watch people who are trying to get started in life, trying to get going with their careers, with families, etc. And it's just very difficult right now to make a move to buy a home as opposed to the lower cost of renting. So let's get into some of the numbers here, and I'll try and point out some things that I believe are maybe little rays of sunshine. This is a chart that I usually don't use just because there's a lot going on in it, but for the whole year and summarizing it, it's kind of perfect. And just bear in mind that this data pulls out just Colorado Springs, so it would ignore towns like Cascade and Falcon and Peyton and things that might be included in some of the other charts that we see. But we're looking at percentages here. You can see it when we compare the 2 years. We've come out of a bottom. And I think a lot of us are looking at 2023 as like, okay, I'm glad that's over with, but why do we still have the same problems? High interest rates. But we see a pretty good increase in new listings, a pretty good increase in sold listings, and the median in sales prices increase. So if you owned a home, it went up in value. If you haven't bought yet, you saw that home prices did increase. This fancy little chart basically shows us that all the while through all of this stuff, we saw increasing values in properties, and we definitely feel that and know it. For those of you who don't like a fancy chart, I just want to point out these two numbers right here. You see that we're basically flat in terms of sales volume. That's in billions, 6.3. And then you see the total sales number dropped a little bit by 2% when you compare the two, but that's okay because we made it up when you consider that the average sales price did increase. Going into these set of charts, and again, I don't use these a whole lot, but they're helpful when we're talking about year over year as opposed to month. This fancy little chart over here, or the bottom, that is making your eyes go, what the hell is going on? It's not a set of like bad teeth carved on a jack-o'-lantern. It's truly just market data, dots on a graph, if you will. But you see that these are very sharp. And that's because that's the listing activity. And remember, not every listing sells. You can see, though, when we go up here, and this is the section of this whole page that I'm most focused on, is we had this high in 2022, and we dropped a lot. We lost 23% in volume, and then we went back up 8.2. So we're not back to this level of pandemonium. And having days on market that's just a little bit below 60, I think is helpful to remind us that, not everything should sell within minutes or days of being on the market. Pending sales, these get clipped off a lot because pending sales tend to take a lot longer to sell, and that then pulls a number out of the active properties as well as the closed properties. So that's why these a lot of the data is a little less steep in terms of their number. Again, when you look at the pending number here, you see that we came out of a trough. Sold listings, this is the anomaly. What happened here? How come this dropped and the other two showed that trough? I can only summarize that, we saw a bit of a bump in interest rates after the recent Fed change, and that clipped off our potential to surpass that 10,154 number to show that trough. And I think that economists far smarter than me are going to be able to point to this data and say, yeah, the interest rate spikes that occurred and the oscillation and changes in daily rates really clipped off a lot of buyers who were qualified then were not qualified. When we dive into the local numbers that PPR generates for us, we're looking at homes for sale, 2506. So we see this neat little curve here. and we are well above where we started out at a year ago today. New listings. So again, all of PPAR, which is the whole area that the MLS serves, not just Colorado Springs, which is why this number is 707 and not something in the 400s. Total under contract. Again, the canary in the coal mine, as I've always said, this is what reflects a buyer's willingness to put a home under contract and for a seller to take an offer. Not everything that goes under contract closes, but I still feel that this is really relevant information to share. Average days on market. It climbed a little bit. And again, I'm not going to stress about this because a 3-day change is not something that is going to cause me to freak out. If we went from 54 or 44 to 54, and then we went 54 to 64, I would be a little more concerned. Total sales year to date. We're down a little bit, but again, I'm not going to make a big deal out of this. I think we could easily recapture this in the first quarter of 25. But it is what it is, and it basically signifies that the cost of the mortgage monthly compared to the cost of a rental monthly has people choosing to rent over buy. Average and median sales prices. We saw this little bit of a decline here in the average sales price. That just means that a few more homes sub 400,000 sold compared to some $1 million listings that are still sitting. Median sales price stayed the same, and this kind of surprised me because if this went down, why didn't this go down? Simply meaning that there were an equal amount of homes that listed and sold above 485 compared to an equal number of homes that were bought or listed and sold below 485. And then that 485 number, again, is the frequency number that is the most likely transaction. Housing statistics. I want to dive into the condo number a little bit at the end here. We saw that December produced a little less sales, as opposed to December, it produced a little less sales than November. And that probably was the run up to the election, probably a little bit of better rates being available during November. But that little bit of a difference, again, not too concerning. However, to see this nice change from here to here, that's good news. Condos. We all heard about homeowners insurance rates spiking, and we're seeing this wreak havoc on our condo and townhome sales because you have communities that used to be 200 to 300 a month, and that was palatable, and now it's like 500-600 a month. And there are even communities, I won't name names, but they went from 300 to 900. So keep that in mind if you're considering a condo or a townhome going into 25. What is that monthly HOA payment going to look like? Anyway, that is the market recap for 2024, a little bit of December thrown in there. And I want to thank all of you for sticking with me through all these videos. I want to thank all of you for your questions, and I look forward to speaking with you on the weekly Your Questions Answered video that I'll be putting out as well later this week. So thank you so much for watching, and I'll look forward to speaking with you on the next one.